So, good evening again to everyone. We are in our usual Saturday evening session of Masterclass. This is the 1st of July, start of a new month, and the market's given an amazing close to the last week and the last month. So, let's take a look at the Nifty, Bank Nifty, and the rest of the sectors first. Nifty, wow. I think wow is the right word to say here, to use here. Back to back, two big moves coming in. I was wrong Friday morning when I thought that more than 100 points gap up, pretty strong 75-minute bar, and it should be done for the day, for the week, for the month. But no, it's not done. Exceptional weekly charts. Let's start from the weekly perspective. 2.8%, almost 3% gainer coming in and hitting an all-time high in some style. And not just in some style, at the juncture where we were right at the verge of expecting a down move, right? So all the shorts or the negative trades that got created thanks to this move, thanks to this divergence and all those things have completely got squeezed. But nevertheless, we're at an all-time high, very, very good looking strong candle. The scope of breakout failure is very, very low, because for this breakout to fail, it will have to give back all of this gain. A 3% down move is very unlikely. Element-wise, the trends and the momentum indicators have definitely improved. Yes, our range indicators are shooting outside the 1 standard deviation, almost touching the 2 standard deviation, which is telling us this is an exceptional move, and we know that. So we shouldn't hurry to add long positions. We must understand that from the jaws of a cascading downtrending possibility, the index has moved into an uptrend with extremely high momentum. Means we need to be really, really patient for some good long opportunities going forward. Having said this, the reversal, the improvement of sentiment, the all-time high, and all those things have happened so quickly. I don't think that this is going to change the nature of the overall market conditions. What I mean by this is, all throughout the month of June, we had a stock-specific, sector-specific, long-short kind of a market environment where equal bullishness was counterbalanced by equal bearishness also. We've got long trades which have worked well, we had short trades which have worked well and not worked well also. I don't think that just a 3-day move is going to change that to an overall bullishness going forward. I don't think so it's going to happen. I think that even going forward is going to stay stock specific. We will get opportunities on both the sides, and we'll stick to our rules and we'll go for it. Yes, we had a choppy month of June. It didn't end as well as we would have liked it to, but that's okay. It's just a reminder that we cannot be as good as we traded in the month of May. So we'll improve next month. Level-wise, now it's very difficult to come with a support in this kind of a market. From the weekly point of view, 18,600, 18,500, the recent weekly lows, bare minimum. Any kind of a throwback can be a possibility when we get such structural breakouts in long-term charts. A throwback is generally being observed. So even if it throws back, then 18,800, 18,900. Well, I always talk about the 50% mark of a strong red candle or a strong green candle. This is a strong green candle. So 50% mark is close to that, little below that 19K. 19K, of course, is going to be a psychological level that the market will want to hold on to. So from a short-term point of view, little below that 19K. From a structural medium-term to long-term point of view, 18,500, 18,600. We are at an all-time high. So let's not just try and figure out targets on the upside. Whatever you'll use, you may fall short. The ratio charts that we generally track, the Nifty vis-a-vis the USD INR, Nifty is clearly outperforming. The ratio chart that we use, Nifty vis-a-vis the gold, remember some runaway setup which was shaping up on the weekly time frame, is playing off well. So buy Nifty, sell gold did work in the last 3 weeks. So overall bullish. Mid and small caps, this is the CNX mid cap. Now, if you take a look at the mid cap daily chart, sharp sell off, equally sharp bounce back. And when we do see these kind of equally sharp bounce back, clear divergences starts to develop. Now, clear divergences starting to develop does not necessarily mean it has to come down. But considering the series of hiking that we are observing in the weekly, even if the index creates a wider range and stays within that, I wouldn't be surprised. If it continues to go up, congratulations, I have no problem with that. I will have a problem if it straight away comes down like this. I don't think so that's going to happen. I strongly sense that it can probably create a range for itself and consolidate this run up. It has not consolidated this run up. It's been a run up since March, April. So April, May, June, 3 months of run up. It's yet to consolidate a single week. So I sense the time is ripe. It should. What about the small cap? As you can see, the small cap did bounce, but like the mid cap, it did not take out its previous fractal high. It's more or less at the similar levels. And of course, divergences will play out. Of course, a great run in the weekly time frame. And of course, my view over here is also similar in lines. I expect it to slow down. We should not forget that the small and mid caps played a great role recent times when the large caps like iBank and HDFC Twins and SBI were slowing down. The party was intact within the small and mid caps. Will it shift? Will the small and mid caps now slow down and the party goes back to the Reliances and SBIs and HDFCs? Well, HDFC definitely is happening. Whether SBI, ICICI and the others will pick up or not, that needs to be seen. Bank Nifty. Now, Bank Nifty was one of the early movers to an all-time high around a month and a half back with auto and FMCGs. And this rounding topish kind of a behavior, a good part of this we managed to create some short trades and make use of, completely has reversed. And kudos, I think HDFC Twins definitely are the ones which led this move. Sharp move, 3 days, stretched RSI readings, weekly long green candle. It's kind of given you a breakout, isn't it? If you take a look at the weekly charts, it's give you a breakout like this. Breakout level comes to the 50% mark of the long green candle. What level is this? This is around 44, 100, 200. So 44 to 44, 200, 300 is the short-term support. Any kind of weakness will only come below yesterday's low, in this case Friday low. Nothing on this chart tells me that there is any divergence or any weakness. Unless it's a breakout failure, it's not going to come down. I don't think so it's going to come down. The only early sign will only be below 44, 200. Keep a bullish view and look for some trading opportunities, long opportunities in this pack. The problem that we will face looking for opportunities for next week is the extent of the move that the stocks and the sectors have given us. The way that it has gone up will puzzle us. Where do we keep the stop loss? A 3-day low will be extremely low. We'll end up chasing, which will be a typical naive amateurish breakout trade. So these kind of intuitive issues we have to deal with. The Bank Nifty with the CNX 500 ratio chart is still weak. Yes, the Bank Nifty has bounced back, but the underperformance that the banking pack has gone through recently vis-a-vis the overall markets, that weakness is still there, even from a weekly point of view. So, is it going to turn around? The daily charts are definitely improving. So, going forward, maybe the banks and the financials will outperform. But the weekly chart is not that great. So we should keep this back of our mind. Maybe not the next week or the coming 2-3 weeks, maybe not. But if and when we get some meaningful weakness correction, then we should check this ratio chart again and see whether this ratio is giving fresh shorting opportunities or not. When will that happen? That I don't know, but we should keep this back of our mind. Now let's go to the other sectoral indices. CNX Auto. Breakout. Clean, clear, big time breakout. See, many charts, I can see this in CNX Auto, will tend to behave like what we know as the last bullish engulfing, where you get a bullish engulfing not at the bottom of the chart, but at the top of the chart. And that creates the last bout of buying before it reverses. Is that the case here? I do not think so. By the look of it, no. Because the size of the candle is such that expecting that within a week's time it will fall below the low is too much of a... And even if it does, just imagine the kind of shock that we will have, the kind of volatility that the market will go through. I don't think that's going to happen. I feel that it will try to consolidate, but the way the Heiken Ashis are behaving on the weekly, don't you agree with me that it needs a cool off? For the health of the market, it needs a cool off. It's just going up as if there's no tomorrow. That's not healthy. CNX Auto, with the overall markets, the ratio chart was cooling off, was slowing down. This is where Maruti, this is where Asher Motors, this is where we got some opportunity in M&M, did not play out, was slowing down a bit. But now it's holding well. So relative strength-wise, not a problem. Auto will remove all this prospective weakness that we were expecting last week is all gone for a toss. So we need to remove these flags. CNX Energy, still range bound. Still range bound. We know that the recent cool off, the recent fall was supported by the fall in Reliance. Not a great looking chart. If you go by the readings of the momentum and the reading of the trend, it's not a great looking chart. Bullish indeed, but not overall bullish. So it's got some weakness in it. FMCG. Now, we have Hindustan Unilever as one of our prospective trades in my weekly portfolio. Clearly shaping up like what a pattern trader will call a left shadow ahead and a prospective right shadow, and this being the neckline and the breakdown and all that story. Possible. I do not disagree to that possibility, considering we've got some deteriorating momentum on the daily. But price has gone range bound. Weekly, stretched. Look at this beautiful golden bar that we have on Heiken Ashi here. Is it going to lead to a fall? Again, the same story. Weekly low needs to get compromised. Weekly candles, most of them are pretty long. I don't think they're going to get compromised. So maybe a range-bound activity coming forward from FMCG. IT. Now, this can be an interesting candidate. This can be an interesting candidate, and the Friday's move was from the very beginning fueled by Infosys. Now, this is where we are observing some good improvement. At the same time, momentum improvement on the daily as well as the weekly. What I'm trying to say here is the underlying momentum of the index, CNX IT, is improving at the same time within two different time frames. This is good news. Of course, the candles are pretty long on the daily and the weekly. Trend improved. Weekly just about to improve. All the hassles that it went through during this phase is now probably heading towards higher highs. We should wait for cool off of our range indicator. Shooting outside 2 standard deviation like this requires a 2-3 day cool off. It will definitely cool off. Then we can look for opportunities. So bullish on IT. Metal, I would say similar to the behavior we saw in energy. Range bound, has not taken out last week's high. It's created a three-week range. No problem in the momentum. Short-term momentum is just cooling off. No problem. Back-to-back 2 golden bars. Who knows? We might get a breakout. So metals stocks we can check. Is it going to be Tata Steel or Hindalco who can give us this breakout on the upside? Daily charts, not really. Weekly charts still looks okay. Daily has created a fairly wide range. So any kind of a trading decision, directional trading decision, I think weekly makes more sense. Bullish. Media, we do not track it so much. What we are looking at essentially is a throwback. This is a throwback of the breakout, which means that it should give us another opportunity on the upside soon. Daily chart is weak. Weekly chart is weakening. It needs a little bit of time. Pharma, we are enjoying our position in Sun Pharma, and Sun Pharma is the one which helped this move on Friday. No problem with the trend, no problem with the momentum. On the daily as well as the weekly, ride the trend and wait for some signs of weakness. No signs of weakness on the daily, weekly. Maintain a bullish view. We have a position with Sun Pharma, so that's good news for us. And finally, real estate. Not a great looking candle like the others have managed. A 3-week range again over here we can notice. Exceptional behavior from Heiken-Ashi. Now the size of the candles are shrinking. Momentum on the daily is weakening on the M2s. M1 has started to improve. Created a range for itself. Attempts of a trend reversal. Attempts of a trend reversal for the real estate. Let's take a look at it. Since then, there was no serious attempt. The only time you can say prices slipped below the 5 EMA, stayed below the 5 EMA was recently here. That's when I had a DLF position and it was working out okay for 5 days. But the others didn't fall that much. So looking at the weekly, considering the way they have moved, these sectoral indices, auto, FMCG, real estate, it's, I think, healthy for the weekly charts to give us a consolidation, if not a correction. We would love a correction because we are directional traders. But even if it gives a consolidation from a short-term point of view, we might get quick hit-and-run trades. So net, the Nifty, Bank Nifty and the overall markets moving on to an all-time high with a lot of drama, momentum, holding exceptionally well. Not only did it reverse from the jaws of a trend reversal on the downside, it bounced back like there's no tomorrow. It held at the highest point of the day. It never slipped and created an upper shadow. So all the necessary ingredients of bullishness was there last week. No reason for us to behave like contrarian and look for some shorting opportunities. No. But we will also not chase and go long. We'll look for better opportunities. We'll look at metals. We'll look where it looks fair enough to go for it. And back of our mind, we should always keep it that auto, FMCG and real estate, the names that we just discussed right now, aren't they, isn't it necessary that they should consolidate? So we'll keep an eye on them with a pinch of salt. Whatever up moves we get there, we'll consider them, we'll accept them with a pinch of salt. IT can be an interesting one. Metals can be an interesting one. And banking and finance is always interesting. Right? So that's our market discussion. Now, in the next leg, we will quickly scan the Nifty 200 from a weekly perspective and look for any long opportunities for next week.